So let's talk about the investing fact of the week.
This week was a busy one. Number one, OpenAI acquired Peter Steinberger and OpenClaw, committing to keep the project 100% open source. I know I've been critical of OpenAI the last 3 or 4 months. They made a good move, and the crazy part that Peter wanted to make this for Claude, and the legal team blocked it. Great addition and great pickup by OpenAI. Amazon is down 17% this month. It's worst since April 2022. And NASDAQ is down 100%. And then lastly, a very important one for you options traders, the put to call ratio is near a high of a negative 1.1. This happened in January of 2024, April of 2024, April of 2025. Usually there's a dump when the call to put ratio is this high. So let's see if history rhymes again. But the put to call ratio is at one of its highest levels, which indicates we could be having a deeper fall here pretty soon.
Yeah, you have it. That's good information. What's the trading tip of the week?
I keep getting pushback on these contract sizes. When I did episode 70 with them, I want to be clear because I see what kind of mood Rashad is, so I'm gonna be in the same mood. I feel you, my brother. When I did the episode in 2020, that was my 6-year trading futures. Not everyone wants to trade 1 to 3 contracts forever. At some point, you're going to have to size up in order to have freedom. If you're new here, my rule of thumb has always been 300 practice trades and then go live. But you can't put a Basquiat on your wall trading 1 to 4 contracts. Put in chat, I deserve to size up to become free. Practice like crazy. But once you get 2 years in, you need to be in that 10 to 15 contract range in order to make the moves that you're making in the market worth it. Trading has considerable risk. Please consult your advisor. You have to love this game inside and out and be dedicated to it. But you know what really sucks? Catching a 700 or 800 point move on the NASDAQ and Dow, and you're 1 contract in. You may have caught one of the best moves of your life, and then when you transfer the money, it doesn't feel like you had any significant value. So you got to size up.
No, it's very important. I was going to pause you, but I'm not going to pause you because this is too important to play.
Go ahead.
This is
you got to size up.
Yeah, that's crazy. But this is true. And when I was watching your presentation, I'm always looking for like just new information. So even when you talked about contracts being the same price in futures, right, which is very different in options, which almost made me unravel the level of discipline that I usually have because I started looking for contracts that would be more appeasable to a grander audience, meaning like these are more affordable, and if they're more affordable, more people can get multiple contracts. Whereas in the past, it was always, hey, let me go find a leap out there that is a year, maybe 18 to 2 years out, a little bit more expensive, but we buy time, which means we buy volatility. And so there's like this space that I'm wrestling with because it's like, yes, you want more people to have exactly what you're talking about. I would say when you have a investment or you make a trade that works, 2 things happen. One's going to be like, man, I'm so happy that worked. And I'm happy that I'm in the green. And the other thing is, damn, I wish I would have put more money in.
Absolutely.
Those are the 2 things that
every
always,
time.
When you in the green, it's like, damn, if I got 1 contract, man, if I would have had 2, or I had 5 contracts, imagine if I had 10, or I had 10, but it pulled back a little bit and I sold half of it off. And those things always happen. And I think it goes back to that piece we talked about maybe last week where it's like, don't skip that. Like you should go through that.
Yeah.
Like you should prepare yourself for that moment. You should prepare yourself to be in those positions because it will teach you about grit. It'll teach you about financial intelligence mixed with emotional intelligence. You have to go through it. But the discipline piece of saying, you know what, this is my moment. I feel comfortable now. Like you said, 300 trades. For me, it was 2020, July. I said, I'm comfortable. I'm going for it. At some point,
you gotta scale up.
Trading has considerable risk. At some point, you've got to get to the point where it's like, I put up enough practice shots. it's time for me to I got to go in the game now and start and really say this is my plan, and I'm going to execute at a high level, and then be disciplined about that.
Yeah, and some of you ask for when is the time. We'll tell you. Like I remember when April happened. I did Good Day New York. Of course, we did the show. We're telling you, like, no, this keen buying opportunity. Like even for me, that April made the rest of my year. Like I could have been done just trading in April. Like that allowed me such a large swing percentage wise that I can be really careful after every trade after that and only take perfect setup. So we're getting close to an inflection point like that. And kudos to all of anyone if you're new. But this being my 10th year in this future space when it wasn't that many of us of our hue in it, I'm telling you, at some point you have to have moments in which you graduate. You've seen it even in this partnership and with their show, right? You go from show to get your tickets to Invest Fest. At some point, you have to scale and get outside of your comfort zone.
Here's a question, and just full transparency here, because I've noticed this happen time to time. You have these great gains, 1,000%, 2,000% in a company. You have your stacks, and I think maybe in 24 I noticed this, right? Just having some great gains and saying, hey, we've won big here. We can be a little bit more risky over here. And then in 2025, realizing like, wait, no. You got to stay as disciplined as you were when you got the big gain, even more disciplined, even more precise. I think that's where the stay low, keep firing thing comes from. It's like, yes, stay low, be in the research, but like still strike with the same amount of position. Don't get loose because you've got pause. Don't get,
Some of y'all was at All-Star Weekend. I heard we'll talk about it on Blackout or not.
Don't unravel. Don't lose your plan. Don't get undisciplined because of those gains, and that happens a lot too, right? Like people will say, "Oh man, I hit the 500% bet. Let me go. I'm trying to do this again." You got to
change your risk profile. Can't do it.
Risk profile can't change, and that is something that's very important. And on the downside as well, I've seen people, hey, you know what? I did this call, it didn't work. I'm never doing this again. And then they watch that same call for somebody else. It's about the discipline, but it's also about the experience too. I think we can't overlook those two things together.
And probably an even better lesson in futures, your risk profile should not change. And then once you scale up, you should stay in that pocket of contracts, whatever you're trading, 400 trades. That way you can have clear risk profile and you're not going up, let's say 1,400%, but then drawn down 300%. Your stop losses should be the same. Your target should be the same. Even in Red Panda, they'll ask me like, what's your short target? I'm like, it's the same thing from episode 70. You can't keep changing. And that's why like when Rashad is hella conservative, I like that because he'll be in the game 15 years from now. The people who blow up all their funds, like take Sam Bankman-Fried, right? He did a couple things that were illegal and missed out on a whirlwind of an investment in Anthropic because your risk profile changed because you start crunching the numbers to meet a shorter term metric. If you stay conservative, only risk 1 to 2% of trade, 10% of trade, you won't have those issues and you'll eventually be able to hit a home run. So keep your risk profile the same throughout your trading career and then go a hell of a lot easier.
And then
we do what you want.
Or do what you want.
So somebody said, where in EYO should you beginners go to learn how to trade? Well, we have the group, and then we also have the options classes that are recorded. The first options class is I think archived and it's something that you can go back to as a reference point if you were in the EYO University community. But also, is before we leave this topic of trading, we gotta talk about Coinbase and what that represents as far as short-term trades, because short-term trades, I got burnt a few times with short-term trades. And the thing with short-term trades is that sometimes factors can work against you that you don't have control over. And you got to be extremely careful. And that's a good example, I think, this Coinbase situation. So you want to talk about that?
Yeah, man. You talk about all of the signs pointing to a negative earnings report, right? Like if we look at the space that Coinbase is in, obviously cryptocurrency is huge for their bottom line. We looked at how Bitcoin's predominantly has performed over the past 6 months. or even in the last quarter, we talk about the downtrend of Bitcoin and how long that usually lasts. Usually these downward cycles last anywhere between 150 to 360 days. On the
Yeah.
shortest term, it's been like 141. We are currently, that was Thursday, so we're currently in like day 136 or something like that. So we're still in that short term phase. You look at that. You look how Robinhood reported, and they pulled back on their earnings, obviously because of the downturn in their revenue from cryptocurrency, Bitcoin being a leader. You see how much the revenue comes from Bitcoin. I think it was like at 20%. And so you start asking yourself, at least I was asking myself, like, okay, well, if we see all those metrics on a downward trend, then Coinbase obviously must also be in this because it's in the same sector. You go a little deeper into the research, you find that 50% of Coinbase's revenue comes from cryptocurrency. It doesn't say specifically, there's no details on it, but the estimated what people perceive.
You can see the correlation.
The correlation, right? I think there's that 34% of that cryptocurrency revenue comes from Bitcoin alone. Again, if it's in the downward cycle, you can see how revenue is going to miss. And so I said, okay, well, I hate puts, number one. I hate puts. Hate them. Don't do them. Rarely. I said, this might be an opportunity here. Let's put a put on this. And it was like right at the money. And at like 4 o'clock, this happens. And we're looking great. All day we're looking great. And then like at 4 o'clock, we're looking even better. It gets down to 134. I'm like, perfect. We've dropped $14. And I'm watching this thing and I'm watching it. And then I watch it go up. I'm like, hold on, let me read the report. Missed on earnings, missed on revenue, future guidance is weak.
Yeah,
right?
future guidance is terrible. Brian Armstrong ain't said a fucking word. Quiet.
Everything you can think of is in the favor of this should be a pullback, right? I watched it go to 148. I said, oh, damn. After hours, we can't control it. I know there's some platforms that allow you to trade equities 24/7, but in the options, you can't do anything, right? After 4 o'clock, you're done. You can't do anything again until 9:30 when the market opens. I'm watching it for an hour. It goes from up to 154. I'm like, yo, what? This is. Then I start thinking like the market will always punish you for doing short term. This is why I hate doing puts.
Yeah.
Wake up in the morning, it's at 154. I said, oh my gosh, this is ridiculous. Coinbase ends up closing at 164. Like the put was at 148. So obviously we lose on the put. And just for full transparency, when we do puts, we're not looking at them as leaps, right? That's too much time. And so if we do a put, it's usually going to be a week, 2 weeks, 3 weeks out, so we can get to that price. It shot up to 164 on Friday. Obviously, the market wasn't open today. It'll probably stay in that range. And so I'm trying to figure out who's holding this company up. And the only thing I could find, and hopefully maybe somebody can add some texture around the conversation, is they said that it had hit a bottom and retail investors are saying, let's buy the dip. And I said, nah, man, no way.
Cap.
No way.
Cap.
No way. And so
it wasn't retail that led that charge, but kudos to the institutional buyers. I see you.
And sometimes we talk about being a short seller. In that situation, the short seller got squeezed. That would be a short seller getting squeezed, right?
Yeah.
Like when everything is pointing to the downward trend, you're saying, yes, here comes downward trend. Okay, here comes market. Squeeze you out your position, take the liquidity. It stays afloat. Now, how long will it stay at 160? Let's say it stays up there for 4 weeks and drops back down to 130 at some point. All those people who are inside of those short-term calls or puts all get squeezed, liquidity is taken by the brokerage, and we get stuck looking like, oh my gosh, why did we do this in the first place? So just be careful when you're doing puts. This is a valuable lesson that can be learned.
Opposed to a 2-week time frame, what time frame would be beneficial for them to hold the put where it could pay out in their favor, like going forward if they was in the same scenario? But you got a month or how much longer?
I think a month. I think it's month suffice, month and a half at the max. I've done probably like 5 puts in like maybe at the most. I could probably like maybe 10 at the most in like 7 years, right? This is something I rarely do, but the opportunity was pointing in that direction. It didn't work in that favor. And so we'll see what happens with it. But again, sometimes the momentum, sometimes earnings could be terrible and you can see we'll see a crazy bounce up $20 and earnings can be great and a stock will be flat or actually pull back, right? We just saw that happen with Google, right? We're still seeing it happen with Google. And we'll talk about them a little bit later, but like these are the things. And that's why when we say like, hey, catalyst events are important. They're good to have as information. They always aren't created the same, and momentum may not move in your favor just because something was great, because there's information that we don't know. But shout out to Brian Armstrong and the whole family.
And the same thing can happen in futures. Like the futures market may drop, and then you'll see a dead cat bounce and it hit your stop and then go back to that direction. That's why you have to go back and test. It's a great thing to do in Claude to find out what the average true range is, to see where to put your stops so they won't get whipped out. So yeah, but be mindful, especially in this market, regardless of the direction that you're going, that you have enough time in your favor and your stop loss is not too tight for the asset that you're trading.
Yeah, and it got double downgraded. Think about that, right? So when we talk about grading, and that's based on how like analysts from large institutional firms feel about a company, there's usually like outperform, perform, hold, sell, strong sell. It got double downgraded to sell, like on the day of its earnings. So I mean, if you look at the report, I mean, everything pretty much was negative, and we saw a bounce. Go figure.
Yeah, go figure. Okay, so blackout at 9:00 Eastern Standard Time on Wednesday. Make sure you tap in, and then earn your leisure at 12 p.m. Eastern Standard Time on Thursday. We got Mark Barnes. So Mark Barnes, if you've ever been to DC, speaking of DC, Park on 14th, you know, he's the one that actually had Club Dream, Club Love, legendary. By all accounts, the #1 club owner in America. When it comes to his 30-year run. If you ever been to DC, I'm pretty sure you know about Park, Dream, and Love. And if you don't, then you out the loop.
Yeah,
but we interviewed him at the park, and he had some
interesting things.
Interesting things to say, for sure.
Man,
interesting things. A lot of gems, though. A lot of gems, but very entertaining. I'll say that much.
It gives very I'm free.
So yeah, check that out. Shout out to the DMV. That's on Thursday at 12 o'clock.